5 out of the 7 majors are reading neutral on my dashboard today. Here's what that actually means before we look at the charts. What does a neutral market mean for your trade? So neutral means if 50% is the midpoint, your calculation has no clear directional edge yet. That means it starts to tell you price could go either way this week. And that means if you force a trade on most of this pair, the market is going to punish you for it. Let me show you exactly why, starting with the pair that has the biggest internal conflict I've ever seen on this dashboard in recent time. We clearly have the British pound and the New Zealand dollar standing quite firm in terms of the sum product of data we are having here. That is the final score. And they are not even clearly bullish. They are just slightly bullish. However, the rest of them fall within the neutral zone, greater than 45 but less than 55% in scoring maths. And we can see them all here. These two are the only pairs I'm even going to be considering this week, the British pound and the New Zealand dollar against the US dollar. But first, I don't just judge the market by just the sum products. I actually look at the high impact overall. The first thing I do every time I look at this chart is to ask, what is the recent high impact news release saying across the pairs? And what I can see here is, just taking a look at the high impact overall data, I can say for a fact that the data is leaning more into the US dollar, especially when you look at the US dollar Canadian dollar. You can see that the strength is 63.42%, which is telling us that there's way more strength in the US dollar than there is in the Canadian dollar, and that is where it seems to have appeared the most. This could be because the US dollar gained strength. It could also be because the Canadian dollar lost some strength also. Probably that's why we're having such strength really showing in that particular area. However, that market is not still the best market where I should be buying after looking at every other thing. Why? This is where we have to look at the recent 14 days. What really happened in the last 2 weeks? And just by looking at the recent high impact 14 days data, we can see that the US dollar Japanese yen had the most impact. Matter of fact, every news coming out regarding these two pair falls more for the US dollar than it does for the Japanese yen. In fact, not just some, every. Meaning the US dollar recent 14 days news has outpaced everything the Japanese yen can produce. Somehow, this translated to just a slightly above mark for the US dollar against the Japanese yen, which is quite shocking. But we are not done with the analysis yet. Take a look at the British pound against the US dollar at 58.98% in the recent 14 days. Also, the US dollar Canadian dollar at 58.18%. All of this is saying that the US dollar gained strength when it came to times against the Canadian dollar. However, in the recent 14 days, the British pound somehow gained strength against the dollar. And then when you look at the New Zealand dollar against the US dollar, the New Zealand dollar lost strength against the US dollar. This is all about the fundamental economic data releases. Now let's take a look at what the technical situation really is overall. The daily technical direction of the market by judging with SMA cross is saying that the British pound, the New Zealand dollar and the Australian dollar against the US dollar should be in a bullish trend. This is where the market says that there is much more strength in the upside, or rather to the upside for these three markets. Then we have things like the Euro US dollar, which is slightly bullish, very, very mild. And then we have every other pair, the US dollar Japanese yen, the US dollar Swiss franc, and the US dollar Canadian dollar, all in the bearish camp, especially the US dollar Canadian dollar and the US dollar Japanese yen. However, this just doesn't constitute for it all. There is one last part of the data that we need to look out before we can move on to determining if this market is somewhere to trade in. We're going to look at what the non-commercial traders are doing in the markets. This is the COT data. This is looking at the COT data and asking the data, or rather looking at the data and asking yourself, what are the big traders doing? The traders who are mainly moving the market for profit, what are they doing? Well, we can see right here that there is much more powerful moves for the British pound than there is for the US dollar. Same thing applies for the New Zealand dollar against the US dollar. Now, with all of that, look at what they are less confident in. We have the US dollar against the Swiss franc. They seem to be more confident in the Swiss franc than they are in the dollar. Same thing applies for euro, same thing applies for Japanese yen. Slightly the same thing applies for the Australian dollar and the US dollar against the Canadian dollar. So all in all, we can say that the hedge traders, the big traders, the institutional traders, the traders who are trading for purely profit and move the market because of their large quantity and large contracts, they are more focused in other currencies than the US dollar at this point in time. With all of this in mind, I know you'll be wondering, what is the variance score meant for? Well, the variance score is exactly what it says. It's telling you the degree of variance among the high impact, the 14 days, the technical direction, and the non-commercial trading data is saying. The higher the variance score, the more red flag that particular market is, meaning the data are conflicting each other compared to the ones with the lower score. For example, take a look at the British pound against the US dollar at 2%. If you look at the high impact overall 14 days, the high impact overall, the daily technical direction, and the non-commercial data, you would realize that they are not so far away from each other. Another place to look at this is the euro against the US dollar at 1.47% variance. Take a look at those four sets of data again. You would realize that they are not so far away from each other. But when you take a look at the US dollar against the Japanese yen, you can see that the high impact data and the high impact overall is miles away from the technical direction as well as what the non-commercial traders are doing. Now, with all of this in mind, it tells you that this market this week is kind of chaotic. The only things that really has a technically, should we call it, slightly clear direction is the British pound against the US dollar and the New Zealand against the US dollar. This doesn't mean that you wouldn't find trade in other markets if you are trading in those markets. You will find technical setups that may or may not work, but there's less confidence in those strategy working than it is when you have the market pointing in a certain direction. With all of this in mind, let's go look at the chart. So we're going to start with the Australian dollar against the US dollar, and personally I trade supply and demand and break and retest structure, basically support and resistance. And one thing I love to do is I like to start all the way from the weekly time frame. From this point, from this particular perspective, we have a weekly stance down here at the 0.69 mark for the Australian dollar against the US dollar. But you're wondering why I have marks at the 0.71 areas. Well, it's because on the daily, those places had very good demand zones underneath them. Why was I going with the demand zones and they are not seeing supply zones in my trade, or rather on this chart? It's simply because in the time when I was looking at this chart, everything I saw on this chart was actually bullish. The market and my data was still bullish. But as news comes out every day, the market changes and we have to change along the market. That is what we traders we do. Now, for me personally, from what I am seeing in this chart, if price should find its way below the 1.71 area max going into the 1.70 max, I expect a retest to the upside before a further push into the weekly demand zones. If, again, it's a conditional statement, if price should find its way below these zones, the 0.71 zones. And personally, that is what I am actually looking out for. Because if that actually happens, then we now have for ourselves a very good supply zone here on the daily. This would be a very good daily supply zone. And then also we have a very good retest area down here where price could retest for continuations of the downtrend to the downside. That is for the Australian dollar against the US dollar. Do not forget, this market is actually neutral in stance. Moving on to the next market, we have the euro against the US dollar. And checking out again, it is a neutral market. Just for a recap, the overall data is leaning towards the bearish side. The 14 days is leaning towards the bearish side. The directional bias is actually bullish, but then again, the non-commercial traders are looking to short this market. In my opinion, this market has more of a shorting potential than a long potential. Looking at the charts, what do we see? In recent days, we've had serious fall off of price to the downside. But then again, take a good look at it all the way from the weekly, the way the strategy works. We have a weekly supply demand zone down here at the 1.612 levels, and we can see price coming straight into those levels. So we are in a conflict zone in terms of the weekly. On the daily, with price coming into the weekly zone, the daily zones we have are the 1.156 levels, 1.15 areas of the chart. And these are places where if price should find its way down here, it's going to be quite difficult for us to have a clear direction of what price is doing. But I personally feel price is going to come back up for a retest. As you can see, it has broken below the low, the 1.65 level lows, which is a very clear break of structure to the downside. And with this kind of break of structure, what I personally expect on this chart this coming week is to see price move back towards the upside a little bit for a retest before it continues its downtrend to the downside. It's possible it could run. Don't forget, the market chooses its own move. We are just speculators. We can only trade what we see and what the price does for itself. Moving on, we have the British pound against the US dollar. This is one of the only markets where the strategy is saying that we should go a little bit very bullish to it. However, I don't just take the sentiment data as it is here. I also always take a look at the rest of the data. We have the high impact data saying it's leaning towards the bearish side a little bit, but in the recent 14 days, we still have some strength in the British pound, even though the technical direction is still quite bullish. And the non-commercial traders are looking more bullish in this market. What does this say to me? Well, from the weekly direction, we have stars at the 1.332 areas, and price has seriously dived into it in just one candle. And this is price coming out of an area that had been a very clear supply zone all this while right here. As you can see, this was a weekly supply zone, and price is finally retesting into a weekly supply demand zone. I personally feel price is just going to have a little bit of bounce up and may most likely continue to the downside. But then again, don't forget, just like the euro against the US dollar, we have been in a channel for a while. You can take a look at this channel I have here in the euro against the US dollar, telling us that price has been within a certain zone for a long time now. If you take a look at that in the British pound against the US dollar, you will find a similar channel staying right here on this chart. I'm just going to show it to you in case you've not been spotting it all this while. This right here is the area where price has been bouncing up and down for the past quite some time, all the way from May 2025 till date. Price seems to have been going up and down within these zones. It could go lower, and we hope to see if price finally makes a clear move in one direction, or it could continue its ping pong effect. With that in mind, on the daily, what we see here is price finally broke below a clear area of demand, or rather, sorry, a clear area of support. It's still demand, in my opinion, but this is a clear break of structure. As usual, what is expected is there may be some pullback, and do not think or make the mistake of seeing that when price does something within the 4 hours here, it's most likely going to pull all the way to the upside. I sincerely doubt price is going to pull all the way to the upside unless we have some very good news data release to push price to the upside. Then and only then do I believe price is making a move to the upside with good intentions for us. Moving on, we have the New Zealand dollar against the US dollar. Fundamentally, this is another market where the data says that we may have a slight bullish move. in the coming future. And looking at the data for what it really is, the high impact data overall is saying 50.53%, which is actually neutral going towards the bullish side. However, in the recent 14 days, there has been more strength in the dollar than there is in the New Zealand dollar, giving us a 32.4% score. Even though the technical data still is leaning towards the bullish side, that is the crossovers, and the non-commercial traders still lean towards the New Zealand direction. Now, what does this mean for us on the chart? I'm simply going to turn off these indicators that draw out supply and demand zones for us. As you can see, this is what I'm talking about when I say daily direction. You can see that this is green right here. So when this is green right here, the daily direction is still bullish, and when it is red, the daily direction is bearish. That is how the daily direction is calculated on the calculator. But let's go back to what the real data is supposed to tell us. The New Zealand dollar has a very good stance down here, which is the demand zone available at the 0.5777 areas to 0.568 areas. That is the weekly support or demand zone we kind of have. However, there's a small problem with us calling this a good support zone or good demand zone. Why? Because we see price push up, but price failed to make its move above highs, and that is a weak sign in my opinion. What this kind of tells me is there is a higher tendency for price to break downwards than for price to actually push off of this. But then again, we are in the markets, and this is not financial advice. This is us watching the market and seeing what the market is doing. Price could come down here and the news could rally up in the favor of the New Zealand dollar, and price could skyrocket tomorrow morning. But on the daily, where do we stand on the daily in terms of this market? Well, on the daily, you see price giving us a good daily support zone down here. However, for support zones to be rated as valid, it ought to break through supply zones. As we can see up here, we've broken through some key supply zones on the daily, but price still fails to find its way all the way above all the supply zone it's finding at the upside. There are a lot, and you can see price tends to have gotten to a good level before it started to fail, even breaking its own available demand zone it managed to create. So, in my opinion, I would say price is more likely to move downwards a little bit more before it moves upwards. It's possible, but the 4 hours is where we can draw that curtain a little bit. From my opinion, like I said, price may move downwards before we see any upwards signs of power, but we still have a little bit of 4 hours restriction around here, where price could at least find a little bit of push to the upside before it continues its full push to the downside. But we're just coming from a weekend, and it's not something you should hope for too much. Moving on to the US dollar, Canadian dollar, these are markets that are actually neutral. The rest of it are neutral markets, and we're just going to be quite quick with them. Moving into the weekly supply, we have very strong supply zones here, and we have price coming back towards the supply zone. And what I kind of see here is a high tendency for price to push to the downside. There is a high tendency for that to happen. If you look through it on the data for the US dollar, Canadian dollar, we have good high impact data, good 14 days data. However, the technical direction and the non-commercial traders are fully against all of the data we've been getting. And that means one thing: there is tendency for chaos to occur here. Basically, a ping-pong effect for a while until that whole situation is clarified among both situations. Personally, I don't even know what to expect on this chart, because when I look at this chart, the only thing I want to see is price make its way to the upside into the zone first. When it gets into the zone, I'll just watch out on the 4 hours, and if I see price continue to make its way to the upside without resistance, it means that the US dollar is gaining far more strength than the Canadian dollar can handle. Moving on to the US dollar Swiss franc, we have very similar situations here. And looking at the data, we can see that it still has good high impact data, slightly okay 14 days data. However, the directional buyers and the non-commercial traders are fully against that move also. So again, there is a tendency for price to come in here and within the 4 hours push to the downside. But the weekly supply zone is way up here. Is way up here, and that zone is far away for price to reach. If price is going to be finding its way to such a weekly supply zone, then we have a long move to the upside for price to make for us to take a trade, and that would be really good buying opportunities if it should happen. The last but not the least, the US dollar Japanese yen. This is the place where the market is in utmost confusion. This is a market where I personally do not even want to come into it. Number one, like I say in every video for the past 2 weeks, price is at 160 area, and this area is an area where BOJ has been known to come in multiple times. We've seen it happen in the past, we've seen it happen in the past, we've seen it happen here, we've seen it happen here, and it's not something any trader in their right senses would want to be buying into. Matter of fact, price created a very strong weekly supply zone up here, and right now price is kind of mitigating into it, even though the fundamental is fully against the situation. As you can see, that the high impact data in recent days as well as the overall data are all extremely bullish in this market. However, personally, I don't see me coming into this market hoping for price to break above for me to buy. I don't trust it anytime soon. Well, I hope you learned something from this video. Looking at the current situation of the entire market, there is much more skepticism in everything as of right now. But as the week goes by and as news release comes out, it may become clearer and we may see better trades during the week. I wish you all the best. If you learned something new from this video, do well to hit the subscribe button and share it with someone you think may find this knowledge very valuable to their trading journey. See you all in the next one. Peace.